Hello, everyone, and welcome for this event. Just to remind you, we have translations, so we have an English channel on the Zoom. And si vous voulez, nous avons aussi un canal en français. Donc, n'hésitez pas à rejoindre le canal de votre choix. Je vais parler en anglais pour des questions de facilité pour tout le monde. Et en plus, voilà, c'est surtout en ligne qu'on a plus on a pas mal de francophones. Donc, voilà, n'hésitez pas. So we're going to start, if it's okay for everyone. So thank you, everyone, to be here. Nice to meet you and see you. Okay, perfect. It's okay for everyone? Yes, I can see everyone. Perfect. So to be brief and let the floor quickly to our speakers and then our participants, I will just quickly remind that in today's international financial architecture, where lending and borrowing shape economic and social landscapes, there is an often an ignored and/or misunderstood subject that is deeply intertwined with this debt dynamics is gender issue. So the new book, Feminism in Public Debt, published in Spanish in September 2023 and credited by Juan Pablo Bohoslavsky, which is with us, and Mariana Rulli, argues that debt is inherently a feminist issue, challenging conventional views of public debt. Published in English this month, the book offers a new perspective of sovereign debt using a feminist structural lens and focusing primarily on deleveraged Latin American countries. So this book aims to highlight the complex links between debt, gender, and human rights. This is how the idea for this event came about in partnership between Eurodad and the PFDD in Paris, because tomorrow opens the 7th edition of Interdisciplinary Sovereign Debt Research and Management Conference, or simply DebtCon, opens tomorrow in Paris for 3 days. Just to remind, maybe for those who don't know, the PFDD, Plateforme Française Dette et Développement, brings together more than 20 French organizations and trade unions, fighting for a fair, sustainable, and global solution to the unsustainable debt of the countries of the South. And so we are pleased to be able to welcome Yolanda and Paulina, our colleagues from Eurodad, with whom we organized this event, as well some co-authors of the books, to have like this discussion to tackle systemic inequalities and work towards a fairer and more equitable global financial architecture. So just to remind you, maybe you already know, but the event will consist like of 2 rounds of questions to our speakers during 1 hour, and after that, a Q&A session with the public here in person in CCFD, but also online. So just let me introduce the speakers. So the first of one is Juan Pablo Bohoslavsky, co-author of this book with Mariana Rulli. So Juan Pablo is a senior researcher at the National Council for Scientific and Technical Research of Argentina, also known as CONICET. Yolanda Fresnillo with us is policy and advocacy manager in the debt justice team of Eurodad, and wrote a chapter on debt and climate change, twin crises burdening women in the global south, with Leia Achampong. And online, we have also Christina Lascaredis, lecturer in economics at the Open University and a fellow of St. Edmund Hall and Said Business School at the University of Oxford, and she wrote a chapter named The Gender Lens for the International Monetary and Financial System, Truly Feminist Reforms Needed. And with us also in CCFD in Paris, we have Marina Zucker-Marquez, senior academic researcher at the Boston University, and especially in the Global Development Policy Center, who wrote the chapter Debt, Development, and Gender with Penelope Hawkins. So if it's working for everyone, I think yes, we can start with the first round of questions. So the idea is to have like 7 minutes by speakers, and I will tell you the time in the chat. Maybe first question for Juan Pablo. Juan Pablo, could you start by presenting the main elements that arise from the book on how gender biases with macroeconomic and debt-related policies contribute to exacerbating gender inequalities from a human rights perspective? Thank you.
Hello, can you hear me well?
Perfect.
Great. Thank you. Thank you a lot for organizing the panel and inviting me to present and discuss the book, which by the way, it's important to say it's open access. I'm gonna share with you here in the chat box. Yep, the link to the book. Yeah, but let me first say that the main goal of the book is to both extend and strengthen a feminist approach to the challenges posed by sovereign over-indebtedness, which is typically denominated in foreign currency of both low and middle-income countries and the frequently resulting economic policies that we see on the ground. This is why chapters in the book focus on sovereign debt and economic gender violence, development, climate change, legal standards, United Nations developments, including conferences on women, international financial institutions, androcentric policies, the right to care, the right to education, women's private debt, budget and debt and life sustainability analysis with a gender perspective, social progress indicators and their relation with that, feminist reforms in the international financial architecture, gender bonds, and also the institutionalization of a gender approach in the public field. And although academic efforts were made to separately analyze all these issues, I think that the book manages to address these topics in a holistic and also in an integrated manner. Well, as UNCTAD has been alerting, more and more low-income and middle-income countries are going through or about going through debt distress. Yet, this higher level of debt has not actually benefited women. And if we take indebtedness to support growth or finance infrastructure as an example, the growth per se does not ensure a higher or better participation of women in the labor market. And we also know that the infrastructure does not usually consider the care economy. So debt vulnerabilities exposes countries to cascade crises, which result in known and disproportionate impacts on women in all their diversity, whether it is measured in terms of formal participation in the labor market, their presence, participation in politics, educational achievements, or the effects on health, among other indicators. In this aspect, there is a vicious circle in the sense that the financial and debt crisis generate higher inequality, which in turn creates higher levels of debt. The international financial institutions led by the IMF and the World Bank have been suggesting and requiring, even during the pandemic, we have to say, the need to implement orthodox economic measures in order to address over-indebtedness. And countries are doing it. Isabel Ortiz and also Eurodad studies on these are very specific. 85% of the world population is surviving under austerity measures, which will continue at least until 2025. These programs have a female face, as they often disproportionately affect this population group, worsening even more pre-existing gender inequalities. The first sectors that usually suffer from budget cutbacks are education, health, and care, all of which are highly feminized in labor terms. And these differential and discriminatory effects occur through a series of causal channels, including the loss of access to public services, fewer opportunities to access or to keep jobs with decent conditions, a larger burden of unpaid care work, the increase of debt in households, and the weakening of food safety, among others. Finally, the large participation of private capital in public services, driven by both the IMF and the World Bank, mainly, by placing profit as an omnipotent factor, is another policy that disproportionately affects women. The negative consequences for women's human rights can be immediately noted in ways that are more or less obvious, and their effects can last for decades. This is also part of the intergenerational implications of sovereign debt. Thank you.
The second question, I will turn to Marina. Thank you to be here. So in the book with Penelope Hawkins, you write on how gender discrimination from sovereign debt relations is not limited to crisis phases or austerity measures and everything. You argue that, and I quote, the seeds of women bearing the brunt of public debt burdens are sown during the expansionary phase of an economic development model dependent on debt-led growth. So in your view, how debt-led growth development policies and gender discrimination are linked?
Yeah, thank you. Thank you for this question, and thank you, everyone. It's a pleasure to be here. Congratulations to all the authors and the editors. This was a very fun and important project to be part of. In this chapter that I did with Penelope Hawkins, which is a senior researcher from UNCTAD, we try to look to the overall cycle of sovereign debt. So there is a lot of studies, very important key ones, that look especially to the austerity phase and how it impacts women. What we argue in our chapter is that there is also, as debt burdens build up because of a specific growth model that we have in developing countries, this is also going to affect women. So we looked from a development economic perspective, where we know from development economics that developing countries, they need to absorb net transfer of resources to develop, because if you rely only on your domestic resources, it's not going to be enough for fast development. So, but what we see in concrete terms is that we do not see an inflow of net positive flows for developing countries. It's the opposite. So we are today in the second consecutive year where we have a huge net outflows from developing countries to developed countries. So this is a feature of the system, but when we see periods of global crisis, it's worse. So this year we saw last year, 200 billion of outflows from developing countries, from a level in the previous year of about 150. So resources are not going to developing, they are actually going out. And in our chapter, we try to look from the perspective of the economist Hal Prebisch, which was the first Secretary General of UNCTAD. And his approach for development was that for a development to take place, you need to rely on more trade and more aid. Why? Because otherwise you're going to need to rely on that, and this is going to feed a problematic approach, not a sustainable path. So but today, when we look in terms of the need of developing countries to increase trade and aid, it's very problematic, because aid is not materializing, especially now. We have declines in ODA, especially because a lot of ODA is remaining in Europe because of immigrants and not being channeled to developing countries. We have developing countries have difficulty to access advanced countries' markets. And development finance, which should be affordable, is scarce. So the standard option that developing countries go is to rely on very costly debt from the private markets. And this builds what we call, and many economists refer to as a debt-led growth model, where instead of relying on more aid and more trade, for you to keep the level of resources that you need, you rely more on debt, an expensive one. So what we looked to is that when during austerity, of course, we know there are cuts, but cuts in social services, on employment sectors that employ women are often the public sector is the cut where a lot of women are employed, health system where women rely on, but also once we have the buildup of debt during the upcycle of the debt life cycle, we see that service starts to compete with priorities that are for women, right? So in our chapter, I can give some examples, but what we try to look is that how during austerity and during the buildup of vulnerabilities, how this affects women, not only as during their life cycle, during their childhood, adulthood, and during elderly phases, but also seeing women as three key components of them in the society. So women as citizens, so the rights to having social services, pension, healthcare. Also women as a caregiver, because we know women play a key role providing services to the society for the cost of reproduction in our society, but also looking to the employment patterns. So if I give an example for us to continue the conversation, but not only when we see austerity, the government cuts, for instance, health services, but once the build-up of that service increases, what we see is that there is a health system, for instance, that is underfinanced in developing countries. And this turns that some women end up having to rely on personal debts to fill, a service that they need. So, for instance, in low-income countries, we see that although women has less access to financial products, when we look to financial needs to fulfill health services, they are the ones that take more debt. So this is an example of how, because we are not providing the services that are key for women, they are the ones that bear the burden of this model that not only harms through all the cycle. So I think this was the key argument of the chapter. Yeah, thank you.
Thank you so much, Marina. And now I turn to Yolanda for the first questions. So in the book with Leah, you write about the intersection between debt and the climate crisis. Can you please explain the way about the women and girls are more affected by debt and climate crisis, please?
Okay, thank you. Hi everyone, and thanks for coming. It was quite a special project, and it is quite special to present the book when we got the invitation from Juan Pablo to participate in the book, and you look at the people contributing to the book. It's an honor to be part of that group, and I really recommend you to check it out. And it's in Spanish and English, not in French yet. Maybe we can push for that. And it was an opportunity for us to look at something that we had looked before, but we hadn't had the chance to get more in depth. And I really think that it is something that we need to explore even further, which was this link between what happens with those gendered impacts when there is a combination of a debt and climate crisis. And we saw different ways in which the impacts were compounded, one over the other, and it was bigger than the sum. I'm not gonna go in depth into the link between debt and gender impacts, which is mostly through austerity measures, because Marina already talked a little bit about it, Juan Pablo as well, and I think it's the most known one. But one of the things that we always put on the table is how these austerity measures and this fiscal consolidation that the IMF recommends and that the countries apply in order to be able to repay the debts, to have the resources to repay the debts, are actually based in the existence of women's work. if women's domestic work, unpaid or underpaid in the informal sector didn't exist, the cuts would be impossible, because no one would take care of the sick, no one would take care of the kids that cannot go to the school, no one would take care of the services that the state stops providing. There is this sentence by a couple of colleagues from the Global South, which says it's the availability of women's unpaid care as a shock absorber that is the premise in which cuts to public services are based. And I think it's important to put the focus on this. It's not just that it has impacts on women, but that because of the existence of that work, that these policies or these cuts are possible. The same that the impacts of debt is not gender neutral, the impacts of climate, the climate crisis is neither gender neutral. Nothing is gender neutral, because if there are gender inequalities, if something you could think of could be gender neutral, what it would be doing is perpetuating the gender inequalities. So if something is not affecting positively, even if you think it's not affecting negatively or increasing the inequalities, it is at least perpetuating the inequalities. But in the case of the climate crisis, it has a particular impact on women, and it's the UN that has said that the climate change becomes a threat multiplier for women, girls, and gender minorities that are exacerbated by these impacts of climate change. I'm going to give 3 or 4 examples, depending on the time, of this interaction between the debt and climate impacts. The first one is related to natural resources dependency. So women tend to be more dependent on natural resources for their livelihoods, particularly in Global South, in their underprivileged communities, particularly in rural areas, but not only in rural areas. But at the same time, they have less access to agricultural resources, to land, to formal land, and as ecosystems are increasingly being commodified, and they have less land rights, for instance. On one hand, we have the increase or the need for increasing resources to repay public debt that often pushes the exploitation on those natural resources, including through land grabbing, through privatization of communal land, through the promotion of extractive projects, which expels women from the land that they could be working on in a more informal or community basis. Oh my God. And on the other hand, climate change is impacting those ecosystems and the production of those natural resources. So the combination of both elements has a particular impact on women. In the case of austerity, I think one of the interesting cases is the case of energy subsidies. How the cuts on energy subsidies are pushed with the need to fight climate change narrative, without having into consideration the impacts in the most underprivileged communities, and particularly women, who are the ones responsible to supply for the energy, for the water, but particularly in this case for the energy, and how in a context of increasing climate impacts and therefore increasing energy prices, also because of those climate impacts, that has a particular effect with the narrative of climate change behind. The other case would be the most logical one, which is climate impacts. When a country is hit by a hurricane, a drought, a flood, that has a particular impact on women and on girls who are responsible for collecting water, who are responsible who have to travel from one place to another, particularly in rural areas, through routes that are affected by that climate impact. in a particular way because that travel is to provide for their families. When that happens in a country with unsustainable debts, that means that the recovery of those roads, of those infrastructures that have been affected by the climate impact is more difficult. One clear example happened, for instance, in Puerto Rico with the Hurricane Maria, where electricity infrastructure was very heavily affected by the hurricane at the same time as the country was in default. And the recovery of those infrastructures was also almost impossible, particularly for underprivileged communities. I'll leave it there. I have another example, but I'll leave it there.
Thank you, Yolanda. And to finish this first round of questions, we ask a question to Christina, which is online. So in your chapter, you provide a critique of the IMF surcharge policy and its effect on borrowing countries, especially in exacerbating gender inequalities. So please, could you elaborate on first what are the IMF surcharges, just quickly. Secondly, on how they specifically impact women and girls, and eventually, what do you propose to address these gendered impacts within the IMF lending practices?
Hi, everybody. Can you hear me okay?
Perfect.
So thank you so much for the question and for the invitation. And I just want to echo my congratulations to Juan Pablo and Mariana for the book and for the publishing it in 2 languages as well. So yes, I think there's hope for more, hopefully. So I'm going to just say a few things about surcharges. What was once a little known aspect of IMF lending policy, and ostensibly through the really hard work of a lot of people, including Eurodad and other organizations, have actually thrown this little known policy into the limelight through a lot of campaign and advocacy. So just by way of background, for those that are not so familiar, the IMF provides, amongst other things, loans to countries with different types of problems, often subject to the conditionalities that we know bring about the devastating impact. So those forms of lending are either concessional or non-concessional. And for the non-concessional borrowing, surcharges are additional costs on top of what a country would normally pay in the form of interest or other types of fees that the IMF levy on top of its regular lending. So a surcharge is like an extra cost, which comes in 2 different forms. One that relates to the size of the loan that country has taken, and one that relates to the time of that loan that is still outstanding. So what the idea behind surcharges is, from the perspective of the fund, is effectively to penalize countries by paying more if they are borrowing a lot, or if they're borrowing for a long time, prolonged periods, as it's called. So to just say something more about this, the logic behind surcharges is that countries that are in a deep crisis, large loans are typically needed by countries which are facing a deep crisis. So the IMF is designing its lending rate in order to penalize those countries that actually need larger loans. So when put together with the IMF's general lending rate, which has increased tremendously over time, these are actually extremely punitive, an extra punitive cost for borrowing countries. So the details, the precise details of surcharge policy is very intransparent and opaque. So it's another black box aspect of that sort of needs unpicking and investigating in order to precisely ascertain what the makeup of those, of the large amounts that countries end up paying the fund, the profiting of the fund from countries in crisis takes a lot of effort to unpick the different composition of those funds. But we had published a report with CEPR, and then subsequently in the chapter in the book, the surcharges might form almost up to 50% of debt service owed towards the fund by the largest borrowers. So it's a significant source of debt service towards the fund. And the surcharges income overall is substantially important for the IMF's own operating income. So this is not insignificant for the fund. So why does the IMF do it ostensibly if there are so many, this sort of policy, what's the rationale in terms of the fund? What is it supposed to do? So in terms of the IMF's own argument, it applies these extra costs basically to disincentivize the use of fund credit. So that's the ostensible rationale. It's supposed to encourage early repayment. So the idea that if you're paying more, you'll be encouraged to repay early. The IMF also says that it applies surcharge policies to manage its own credit risk. So to avoid possible, there's a reason and a way to build up precautionary balances. So to kind of build up its own safety cushion. So basically, what each and every one of these reasons don't stand up to any sort of scrutiny and investigation for a number of reasons. So the problem is that these policies are not just bad because they don't actually do what they say on the tin. They're also actively harmful in conflict with other types of IMF policies at the same time, including the impact on the well-being of women and girls. So we have this sort of double whammy. And I just want to say a little bit more about that before so it's been mentioned already by Yolanda, by Marina, and from Pablo that IMF conditionality is not gender neutral for a number of reasons, and one of those is that women are significantly disadvantaged in the labour market. They're much more likely to lose a job, face lower wages, deal with worse conditions, be more likely to be fired in a downturn, etc., etc. And so surcharges comes to make this worse because they act in a pro-cyclical way. They make an economic downturn even worse, exacerbating the impact of a crisis on women and girls already there. So similarly, along the lines of the argument that Yolanda was saying, women are most likely to be informal workers without the benefits of social and legal protection. They're also likely to be, they're also forming the bulk of unpaid domestic work in the economy. So they pick up all the slack from cuts in public budgets. And the more resources that are taken out of public budgets to repay not only general debt servicing, but extra surcharges on top of that, the more the unequal impact that falls on women's unpaid work at home. So this siphoning away of valuable resources is a crucial mechanism for why surcharges are not gender neutral. So I think I'll leave it at that. And I just want to advertise before I go the exceptional civil society campaigns to cancel surcharges. So in terms of policy proposals, and surcharges now, I think, is the only way. And the campaigns that have been building over, I would say, 3 or 4 years now, have actually have been very, very effective at bringing this little known policy right into the limelight, into the management board in a way that's been, I would say, very, very effective. So congratulations to all those involved in the campaign, but I think it's also worth people who are active, mobilizing around these issues to look at the petitions and the civil society campaigns around that to pick up those demands. Thanks again.
Thank you, Christina. I'm gonna come back to Juan Pablo to begin the second round of questions. Juan Pablo, can you speak about the urgency and relevancy of the book in the current context, reflecting on the women's economic, social, and cultural rights, and how they are affected by the fact that women are usually seen by orthodox economics only at their productive role, and policies, and that the fact that policies are focused almost entirely on empowerment?
Sure, can you hear me well?
Yes, perfect.
Good. So, well, Eurodat has found that 143 countries, including 94 developing nations, are now implementing policy measures that undermine the capacity of governments to provide education, healthcare, social protection, and also other public services intrinsically linked to the realization of a wide range of human rights. Yeah, as I mentioned earlier, 85% of the world's population live now in the grip of austerity measures. So the urgency and the relevance of the book are, I think, self-evident. So as the moderator mentioned in his question, that women are usually seen by orthodox economics only in their productive role, and these policies mostly focus on women empowerment. Yes, and this is linked to the emergence and consolidation of a sector of moderate feminism, which is in turn connected to progressive neoliberalism. And this approach, we now advocate for the recognition of certain rights and individual liberties, but says nothing about the origins and implications of financial liberalism and gender inequality. And this is why some feminists promote gender bonds as well. It is in this context that the IMF launched the self-proclaimed gender strategy in 2022, as is suggested in a letter that mandate holders of the UN Special President submitted to the IMF in 2022, and which is reproduced in the book too. Yeah, the IMF gender strategy tries to be a justification of orthodox policies. And under this strategy, women's interests are relevant, macro-critical in the words of the IMF, and only worthy of being promoted as long as they improve the fiscal situation of the debtor state and promote GDP growth, even at the expense of worsening the rights of women, as is in the case when women are incorporated into the labor market with precarious and informal conditions. In January this year, the IMF released its interim guidelines note on mainstreaming gender, which offers operational guidance to staff to implementing the gender strategy, discussing light touch versus deep dive approaches to gender analysis. Oddly, the paper does not even mention once the word debt. The paper states that staff could also examine comprehensively how shocks and trends, fiscal, monetary, and financial policies and structural reforms can have a differentiated impact on men and women, and hence narrow or exacerbate gender gaps. However, this gender impact assessment of the IMF's own conditionality never takes place. If anyone still has any doubt about the instrumental nature of this IMF strategy, well, you need to know that in 2017, the IMF posted an article on its website written by male economists, where they explain why it is worth investing in the health of women in Rwanda. And I quote, "Healthy women will probably work outside their houses they will have more stamina and energy for physical jobs, and they will work more hours. In a nutshell, this step taken by the IMF to create the gender strategy confirms a growing idea in industrialized countries, mostly about the importance of gender equality in terms of economic efficiency and good governance, which strengthens the mainstreaming of the gender-based approach in some institutions. Yet, at the same time, in many cases, this approach has led to the promotion of a more moderate sector of feminism aligned with neoliberal ideas that is more willing to instrumentalize emancipatory demands instead of challenging the neoliberal assumptions that create and support gender inequalities. Thank you.
Thank you, Juan Pablo. So speaking about IMF, I go back to Christina because Christina has to leave a little earlier. So Christina, your chapter highlights the importance of integrating a gender perspective into discussions of reforming the international financial architecture. Could you share with us, please, your insights on how policymakers can effectively mainstream gender considerations into macroeconomic policies, particularly within institutions like the IMF or G20? And also, are there specific strategies or frameworks you recommend for achieving this integration? Thank you.
Okay, thank you, and thanks for the question. I think it follows on quite nicely from Juan Pablo's answer just now. So, yeah, I think one way of thinking about the structural characteristics of the international financial monetary system and how it relates to gender is to think of two countervailing sort of ways of looking at things. The instrumental tick box view of gender mainstreaming. So let's just get more women in the labor force kind of way of thinking, and actually a much more deep-rooted structural approach at seeing at how the overall working of the international financial and monetary system is conditioned by and shaped by gender relations, and in turn shapes and conditions ways of social reproduction and forms of gender relations. And so I just, as a tribute to Diane Elson, who I think has arguably been a great source of inspiration for a lot of people working in feminist economics, a long time ago now, in 2002, she wrote this piece called International Financial Architecture Reform. Reform of International Financial Architecture, a view from the kitchen, or a view from the kitchen sink or something. And it really had this way of basically looking at the very big macro from the perspective of the kitchen sink. So a very sort of gendered perspective. And I think that's what this chapter tries to do in this respect, which is look at some characteristics on that very big aggregate macro level and see how different forms of gender relations shape those relationships, shape those structural characteristics, and at the same time, sort of policies that might be put in place to deal with them might have sort of positive effect for gender equality. So starting from the fundamental point that I think has underpins this view, that sort of theory of social reproduction view, that women's paid and unpaid labor time are basically the fundamental premise of all social and economic activity. And that this kind of is constituted through historical patterns of inequality, both within and between countries. So when we're looking at the global international monetary financial system, we need to take into account these gendered, racialized, colonial histories of development amongst countries and regions to see how relationships, how characteristics of this system are gendered. So we're looking at huge asymmetries of power and representation in institutions and in global governance institutions, such as the G20, the IMF, the G7, etc., etc. So we're facing this fundamentally flawed system, which tries to solve its problems through these kinds of superficial mainstreaming, let's say, approaches, really just touching on the surface. And so I'll just go into one of the ways that I've developed in the chapter to think about things on that structural level, which may be useful. One is to basically put social reproduction at the core of the international monetary financial system and think about what happens on that level through a social reproduction lens. Think about what this international net negative transfer that Marina has been working on, to think about kind of global inequalities in a structural way, to really focus on the lack of representation in forums of economic governance, and the racialized and gendered histories of development in the global economy. And so if we think of these as sort of underpinnings, gendered underpinnings of what are a number of structural features, which has been highlighted in many people's work about how the current non-system works. So it's characterized by boom and bust cycle and capital flow volatility. It's characterized by sovereign debt crises, by high currency hierarchy and dollar hegemony, by global liquidity cycles in which the monetary policy, for instance, of certain advanced economics in low-income countries, for instance, and thinking about the sorts of policies that might be useful, the setting up of a fair, efficient debt workout mechanism, the integration of human rights or environmental or gender lens in assessing debt sustainability, a much more sound grounding for global financial safety net, of course, eliminating surcharge policy. So policies that might be useful to tackle some of the problems of the international monetary and financial system will have some effects that will have gendered impacts. So taming boom and bust cycles, reducing debt vulnerabilities, sort of conserving foreign exchange, having better access to low-cost, condition-free liquidity in time of crisis, but also more generally, will all have positive gender impact in terms of a local level, both in terms of protecting women's time and well-being, preventing deep crisis becoming even deeper, so preventing that unpaid labor picking up that extra squeeze, as Yolanda very nicely put it earlier, will help prevent diverting further resources away from the public budget. So I won't go more into more of all of this, but I think it's just laying out a way to think about how gender constitutes itself at that international monetary financial level, and how policies to tackle those at that level will also have gender impact. And it's not so common that we look at things like currency hierarchies or capital flow volatility as things as being gendered, but we need to unpick that sort of neutral, blinding stance at that level. So thanks again.
Thank you so much, Christina, for your interventions and your participation, because we know you have to leave early. So thank you so much, Christina. Maybe for the third questions, I go back to Marina. So in your chapter, you speak about a revised conceptual framework for considering debt sustainability that employs a development lens to address gender equality. So could you share some elements of that proposal, please?
So I first would like to echo what Christina said and what Pablo as well. I think we need to have this holistic view, from the holistic to the gender aspect. And additionally to what they mentioned, I think there are two aspects. One is, first, we need a change in the growth model of developing countries. Growth models usually is thought from a domestic perspective. We need to have competitive industries to generate foreign exchange, hard currency earnings to allow long-term sustainability in your balance of payments. But it's also a matter, it's also a global matter, right? Because if developing countries have access to, exports to advanced countries. They could, instead of increasing that, they could increase the exchanging earnings through exports. Or if you have an aid system that actually provided more aid, the need for that would reduce. So I think we need to think globally also in what the growth model these countries are having and provide long-term, non-debt generating flows. This is trade, aid, SDRs, that are all sorts of policies that would be very helpful for this. And then generate space for actually structural transformation in developing countries. I think this is key. Another aspect is the reform of the debt sustainability analysis. So currently the IMF is reforming the debt sustainability analysis for low-income countries. So it's a key moment for civil societies, researchers to be involved on. I will summarize that the key issue of the debt sustainability is that we are not bringing all the contracts to the table. So we have, every country, they have a social contract with its citizens. It has contracts with bondholders, with other official creditors. But when you go to calculate which claims you're going to pay or not, you kind of forget about the social obligations and then forcing to pay the creditors. So we do need a reform. Think that sustainability analysis differently, need to include social spending, SDGs priorities in the debt sustainability analysis, which is basically a tool to see how much countries can repay in debt. If we reform that sustainability analysis, it's not only and bring the key aspects of shocks, of gender, of social spending. Not only we are going to see that more countries need debt relief, but also to see that we need a deeper debt relief, right? We are seeing now negotiations where countries have very shallow, and if you have shallow, you not only won't have resources to invest in women and education, but also you're going to have the chance of you having another crisis again soon is very high. So a key pillar for all this discussion is having a new debt sustainability. So the IMF is reforming. There are other institutions that are also discussing different ways to think about that sustainability. UNCTAD has their model, which also includes all liabilities, tries to look to SDG investments, having a long-term perspective, looking to the development cycle of countries. So these are key aspects I think we need to take into consideration: how to change the growth model from an international perspective to help countries, and how to have that sustainability analysis to underpin that restructuring process and support actually a long-term development of countries.
Thank you. Thank you, Mariana. And maybe also to conclude this second round with Yolanda to come back to debt and climate. So according to you, how we can address both the climate emergencies, challenges, and the gender inequality challenges in the present debt crisis?
I think thanks, I think it's repeating what we have been saying with the debt and climate campaigns, which is it is impossible that we solve the debt crisis if we don't address the climate challenges, and it's impossible to address in a fair way and feminist way the climate crisis if we don't address the debt problems. So we need solutions tailored, including the challenges of both crises, because if not, like what is happening in Zambia. Zambia has got a very shallow, I wouldn't even call it debt relief, that rescheduling, lower interest rates here, extend payments calendar there. And yeah, there are some savings, but still there's going to have to be a huge austerity in the middle of one of the worst droughts that the country is facing because of climate change. So not any kind of debt relief is sufficient. So what we have been calling for is this debt cancellation to allow for climate, but also for development action. We know that the existing architecture won't deliver on this. So if we want a feminist and climate justice solution, we need to build other structures. We're calling for the sovereign debt resolution mechanism under the UN. But in any case, it's this idea that we will need further debt cancellation. And we particularly need debt-free climate finance. So climate finance negotiations are ongoing. The next 2 weeks, there are going to be negotiations in Bonn for the new climate finance goal, the NCQG. And the debt element is something that civil society and some global South countries bring on the table, but obviously global North negotiators don't want, it's like they say, no, this is not our agenda. Our agenda is climate finance. Well, climate finance agenda is a debt agenda as well. The only way of really endorsing the principle of common but differentiated responsibilities is by delivering on a climate finance that is debt-free, that is a grant-based, because otherwise it is the recipient country, the one who is going to be paying for those investments with interests. But also understanding the gender responsiveness of climate finance, which is an obligation under UNFCCC agreements, under the Paris Agreement, but is nowhere to be seen in terms of implementation and particularly of accountability. The reform of the debt sustainability analysis, Marina has already tackled that. I like this idea of bringing all the contracts on the table, not only the financial ones. And this links to the other element, which is also how you started, which is the problem is the growth model. The problem is the persisting neocolonial patriarchal economic dynamics, being still based in fossil fuels, still based in the growth obsession, and that is gonna be making the debt and the climate crisis persist. So a fundamental shift in the global economy needs to happen as well. And then part of that structural reform needs to also to come from the recognition of ecological debts, of climate debts, of historical debts that the global North has with the global South. In this sense, we see climate finance commitments and debt cancellation as part of the reparations for that climate debt and as part of a wider set of structural and financial reparations that should include ecological restoration, obviously the phasing out of fossil fuel subsidies, particularly for companies, which is very different from fossil fuel subsidies for people and consumers, ending extractivism and shifting to other decarbonized modes of production. This transition needs to be financed somehow, and we need to delink this financing from the financial markets and delink this financing from creating even more and more debt. Let me finish by one sentence. Not any kind of debt cancellation, but unconditional debt cancellation, because the only way we can delink debt cancellation from austerity is if it's not dependent on having an IMF program. We have the experience of the HIPIC initiative, which is the debt cancellation that the particularly bilateral creditors offered to global South countries in the 2000s after the debt crisis in the 80s and 90s. And it was conditional to austerity, to privatizations, to the regularization. And we need to delink that. Today, the IMF particularly, but also the World Bank, are linking climate finance to what we call green conditionalities. So a particular way of seeing the energy transition, opening the energy transition to public-private partnerships, to private investments. So unconditional also means the linking climate finance from those type of conditionalities, who are market-based, who are not gonna be promoting gender equality, but all the contrary. I'll stop there.
Thank you so much. We are exactly on time. I never saw that. Thank you so much. So now we have 20 minutes to have a Q&A session. So don't hesitate. Online, you can write your questions on the chat, I think, directly, and we will read them. Thank you. And here in TCFD, I invite you to ask some questions if you have.
Okay.
Hello, I'm Leah. I work for Action Against Hunger. And as you discussed a lot about the IMF, I was wondering what was the position on the World Bank, and especially if you have a position on the IDA, that's going to be a replenishment this year. So yeah, that's the question.
We answer, or because there was another question.
Nice.
Yeah, thank you, Matthew. Congratulations on the project, first of all. Thanks for the presentation. Very much looking forward to Spanish or English. That's fantastic. It's in both languages. My question is broad, I guess, to a certain extent. I wanted to pick your brains on two issues that are running around in the context of the growing pessimism I believe we have on IMF and how it can act. Nevertheless, there's like a slight hope on a couple discussions, the discussion on the reform of the ESA. But there's another one where I think there could be an interesting discussion regarding gender, the allocation of SDRs. Of course, the way SDRs are allocated and managed definitely are not gender neutral, but if we think of a different way or how to channel our criticism vis-a-vis the IMF on the allocation of SDRs, where do you see gender discussion can fit? That's the first one. And the other issue where I want to pick your brains on, and this is probably something that appears in the text actually, is on our criticism regarding credit rating. Again, definitely have an impact on the gender, but in terms of our criticism, where do you see our critique, our gender-based critique, should fit in how we criticize and what we propose to counterbalance the power that credit rating agencies have in debt allocation?
Listen, we have.
Oh, I like this question.
We have a question from Natalia Rodriguez. What are the key moments to advocate for unconditional debt cancellation this year? Any initiatives you would recommend to join?
Yes.
We have 3 questions. One more. We can already answer to the. Okay, let's go for the three. These 3 questions. Someone want to start?
I can start with the World Bank thing. So I was checking and I think the book covers, for instance, on the role of the World Bank promoting a certain type of social safety nets, like in-kind and non-contributory social safety nets, which is something that the IMF also does. But I think the World Bank role in promoting certain types of non-universal, non-contributory social protection systems, the role of the World Bank is more intense, but also in the promotion of PPPs in health and education, which has a very specific and important gender dimension. We have worked a little bit on the gender impacts or the impacts on gender equality of the promotion of PPPs, for instance, which is something that the World Bank is particularly pushy, and this links to our position at this, as you wrote that on IDA. Obviously, there is this whole narrative about the financing gap and the need for millions and trillions flow towards the global south. But what we are saying is that first, the financing gap, while recognizing that is there, it should be tackled also through tax justice and the promotion or the elimination of tax havens, of tax dodging. So not only for global south countries to develop their capacities in domestic resource mobilization, but also to work internationally to avoid illicit financial flows and tax evasion, etc. Obviously, the structural reforms that I was mentioning before, and this idea of the reparations. But that being said, in the short term, obviously, more resources will be also requested by the global south countries. And what we are saying is that the either replenishment shouldn't be done without a reflection on how the World Bank is lending and for what, which is the same position that we had with the World Bank Evolution Roadmap. It's not only about increasing the firepower of the World Bank. It's about questioning whether the model that the World Bank is following is the right model. And I think in relation to gender, and I'm not a World Bank expert, there is a lot of literature about the impacts of the World Bank vision and development model exacerbating gender inequalities, while the World Bank has a narrative of gender justice even bigger than that of the IMF. No. I'm going to leave the questions to the others, which are more difficult. But on opportunities for the cancellation activism, so I think the first one will start next week, which with the UNFCCC negotiations in Bonn, both a coalition led by Asian People's Movement on Debt and Development, another coalition led by Debt for Climate, and we are together with other organizations promoting actions in social media, also in person in Bonn, calling for the cancellation and debt-free climate finance. And this is going to be, if you follow at least Eurodat, for instance, in social media, we're going to be promoting those actions. But I think the biggest opportunity is the 80th anniversary of the IMF and the World Bank. There's going to be mobilizations in the Global South from July, which is when the 80th anniversary kind of starts, because it's the 80th anniversary of the Bretton Woods Conference. But throughout the months until October, which is when the IMF and the World Bank will meet. So there will be plenty of opportunities for that. And then next year, we're going to have several opportunities. One is that it's a Jubilee year in the Catholic Church. We have a southern ally, which is the Pope Francis, Papa Francisco, who has called for cancellation of debts in a Jubilee year and for the recognition of ecological debt, which was a surprise, this element of the ecological debt. So we know that faith-based, not only Catholic, but faith-based organizations are preparing a new campaign after the Jubilee 2000 campaign for next year. This is starting. But then we also have the Financing for Development Conference, which is a huge opportunity for campaigning for the structural reforms that we have been mentioning. And this will happen in Europe. It will happen in Spain in July, from the 30th of June to the 3rd of July next year. So I think starting now with the UNFCCC and the 80th anniversary towards the FFD conference, the Jubilee year, and the COP next year in Brazil are very good opportunities to highlight the need for debt cancellation and debt-free climate finance. And I think they go together.
Thank you, Yolanda. Marina, if you want to go on, and after Juan Pablo.
I would complement the debate on IDA to link IDA replenishment to debt relief. So there is a lot of discussion to have the highest replenishment on history, which I agree. I still think it's too small. Should it be bigger? And I think I will slightly disagree with Yolanda here, because I think we need a bigger system to be able to, manage resources for better use. So I think they should go hand in hand, bigger and better. But going back to the IDA replenishment and sovereign debt distress, we see that a lot of developing countries that are today in that distress, IDA clients, they actually are own a lot of their debt to the World Bank, to IDA, to multilateral development banks, which has preferred credit status. And we did a report last year, which we are presenting Friday in the conference, where we looked at the impact of IDA because of that distress. So what happens in IDA? If you have if your economy has high chances of that distress, all resources that come from IDA is going to be 100% grant. If you are with middle chances of that distress, 50% is grant and 50% is credit. And if you're low stability, then it's 100% credit. What we see today in the business model of IDA is that because a lot of their clients are in that distress, all the resources they are putting to their clients is actually 100% grants. So the business model of the IDA is not sustainable, because IDA is supposed to have resources from shareholders, repayment from clients, and resources coming from the IBRD and the IF's World Bank Group, right? So today, IDA is not as efficient in terms of volume of grants because their clients are in that distress and they cannot pay it back to. So why not? What I have been questioning is that why not link IDA replenishment with debt relief for these countries? So we do have a fund, the debt relief fund is a fund that still exists, but it has basically $0. So why don't target, a portion of the debt IDA replenishment or more to this? Because if you give that relief for these clients, when they receive IDA resources, they can actually prompt in resources from other shareholders, from ODA, from development finance. So it's actually better for everyone that we link IDA replenishment with IDA relief to this client. So maybe it's a little bit confusing, but I can happy to share the study that we did. Another question, I think it's generally on World Bank, is that they have, in my opinion, limited approach to how to deal with poverty and consequently hunger. I think that is studies from Hyman Minsky, which is a very well-known American economist who looked to financial stability, but he also has work on poverty and employment. And there is a very strong correlation between poverty and unemployment. So to solve poverty, we could also, one way to go is to providing more employment. But the approach of the World Bank and other MDBs is not to increase employment, is to other ways to reduce poverty that is not related to employment. So we should be promoting more employment, and maybe this is a conversation we should be having with unions, with the civil society. But on World Bank, I will stop here. On SDRs, I think the key question that is among economists and within the IMF is like, what is the role of the SDRs? Are they liquidity or should they be development finance? I think money is fungible, so they can be intertwined. And given the climate crisis that we have today, I think that is a role for the SDRs to be more than a short liquidity approach as it was taught initially. So there are ways to think about recurring SDR rechanneling, why not? Or SDR rechanneling to climate or gender expenditure. Finally, I think it's it's key for us to think, our colleague Andrea always says about thinking about net SDR issuance, right? Because there is a volume, when you issue new SDRs, a huge portion goes to advanced countries and are relatively smaller. So when we think about issuance, new issuance, we need to think, what is the volume that actually developing countries will receive? This is the volume of SDRs that are actually going to be used. And this then connects to the fact that we need to reform how SDR issuance is connected to quotas. And this is going to be a long, complex conversation. Yeah, but I stop here.
Thank you so much. And maybe Juan Pablo, if you want to react.
Yes. Yeah, let me share with you a couple of thoughts related to gender approach of credit rating agencies, something that was mentioned, and how this company should assess the gender implications of public finance and economic policies at country level. Well, credit rating agencies are bound by international human rights law, in particular the guiding principles on business and human rights. Know that corporations have to respect gender equality. There was a report of the current independent expert on debt and human rights on credit rating agencies and sovereign debt from a human rights viewpoint, but not much on gender equality. Yeah, this is a short age in both academia and civil society organizations. It is a great question on how to operationalize these standards and hold credit rating agencies accountable for not fulfilling their duties in terms of gender equality in the context of their sovereign clients' activities. I mean, this is a great question for a doctoral thesis, I think.
Of course.
Because when Juan Pablo mentioned the doctoral thesis, I remember there was this academic, I think, working in the UK. She was from India. I can't remember the name, but I can look for it. But she did a research, an article, not the whole thesis, on how rating agency, so ratings, credit ratings, were interlinked with health systems, reforms in the health systems, and health reforms and cuts in health budget. So policies related to health. And she did that from a feminist perspective. And she found out that there was a direct impact of credit downgrades and regression in investment in health from a gender perspective or a feminist perspective. It was a very initial and interest report, article, and I could look up if she continued working on that, because it was particularly interesting. And on SDRs, I think the other element is what is happening with the SDRs that are being rechanneled. Because what we are seeing today is that at the finance being channeled through the RST, through the IMF Resilience and Sustainability Trust, is being rechanneled to finance a certain also model of energy transition and development without any consideration in terms of gender inequalities and feminist perspectives. So that is also another aspect that we could look at. What is happening with these conditionalities and cross-cutting conditionalities, because to have access to these rechanneled SDRs, you need to have an IMF program. So what is happening with the conditionalities in the IMF program that is linked to the RST? That is something that we could look at, but it's a little bit too early because it just started a year and a half ago. So maybe it's something to look at in the upcoming years.
Perfect. Thank you so much. Once again, we are just on time. I have to give the room at 30. So thank you so much to respect the time. And yes, I think I invite everyone to read the book. It's available online. I think, Juan Pablo, you write the link in the chat. But yes, you can ask to Paulina or myself, and we can send you the link. So thank you so much to all the speakers, Marina, Juan, Pablo, and Cristina, and Yolanda and Paulina, speakers and co-organizers. Thank you, sir. Thank you too to Boubacar and Guillaume for the logistical help. And thank you everyone to be here at this time. So thank you so much.
Thank you.
Gracias, Juan Pablo. Thank
Gracias, Yolanda. Un abrazo.
you. Bye.
Bye, everyone.
Oh.